afternoon, ladies and gentlemen. My name is Gordon Shirley, and as Chairman of GraceKennedy Limited, it is my pleasure to welcome you to the 2020 GraceKennedy Annual General Meeting. GraceKennedy has closely monitored the developments locally and globally with respect to the novel coronavirus, COVID-19 as it is known. The health and safety of the GraceKennedy staff and you, our shareholders, remains paramount. For this reason, in order to comply with the Government of Jamaica's restrictions on public gatherings, this year's annual general meeting is being streamed live, and the number of persons gathered in this room is restricted to no more than 10. This is in keeping with the Companies Act of Jamaica and our Articles of Association, which mandates a quorum of 3 persons. It is important to note that the GraceKennedy Annual General Meeting being held this afternoon is not a virtual AGM, as this would not be permissible under the Jamaican law. What we are having is our annual general meeting in a revised format. GraceKennedy's Articles of Association requires a quorum of 3 shareholders to be present in person in order to hold an annual general meeting. And we have complied with that requirement. In order to facilitate shareholders who could not be here with us today, we are streaming the event live. A notice describing this revised format was included in our annual report packages sent to all shareholders. We then followed up with advisories in the newspapers in Jamaica and in Trinidad, in social and electronic media, and on our websites of the revised format of this year's AGM and the importance of providing a proxy in order to vote. We also encourage shareholders to submit questions in advance of the meeting, and those of you who are watching live may also submit questions to agm@gkco.com. Repeat, agm@gkco.com. I'm very pleased to welcome the persons who are watching us live. We do hope that you and your families are safe and remain that way. Thank you for joining us virtually, and we look forward to hosting you in person again as soon as it is safe to do so. We also thank you for the questions that you have submitted due to the revised format of the AGM. We have allotted additional time, half an hour, to entertain questions. We will attempt to answer all questions this afternoon, time permitting. If, however, we are not able to answer all of the questions today, the responses to these questions will be posted on our website. I thank you again for your continued support of GraceKennedy, and we look forward to getting through this challenging time together. We have received 84 proxies in favor of management, which represents 38.64% of the issued stock of the company. Last year, we received 24 proxies, and this year we have quadrupled that number. Please note that the shareholdings and votes of the shareholders present here in person are not recorded in that number. We are very pleased with this unprecedented level of support from our shareholders, which indicates their willingness to participate in this meeting in a safer way. We will start this afternoon's proceedings with a prayer and invite those persons in the room and online who are inclined to join us as Mrs. Gail Moss-Solomon, our General Counsel and Chief Corporate Secretary of GraceKennedy, leads us in prayer. Mrs. Moss-Solomon.
Thank you, Chairman. Let us pray. As a global company and in recognition of our footprint across the world, we pray in the words familiar to our Jamaicans wherever they are and applicable more than ever to all nations. Eternal Father, bless our land. We give thanks for mercies great and small at this time of many challenges. We pray that the hand of the Almighty will guard and guide us in our deliberations and our undertakings today and always. We pray that the vision of our leaders in church, state, and corporate enterprises will inspire us and strengthen our ability and our resolve to serve our people so that they may truly experience justice, brotherhood, sisterhood, and peace. Grant that all of us assembled here and those joining us virtually from across the globe may indeed find personal fulfillment in the work that we do and be inspirational in our relationships and dealings with others. We ask for your continued blessings on GraceKennedy, on its leadership, and the entire GK family. And we ask that you continue to remind us that we are indeed stronger together. All of this we ask in the name of the Father, the Son, and the Holy Spirit. Amen.
Thank you very much, Mrs. Moss Solomon. I would now like to reintroduce Mrs. Moss Solomon in her capacity as Secretary of the company. And this afternoon, she will perform the functions of the Secretary of today's meeting. Will the Secretary please advise if a quorum is present?
Yes, Chair, we do have a quorum present in accordance with our article.
Thank you very much, Mrs. Moss Solomon. As all shareholders will have received notice of this meeting, which was incorporated in the annual report submitted to you, may I please have a motion that the notice of the meeting be taken as read. Ms. Johnson, Senator Johnson, seconded by Mr. Masado. I would now ask that the first resolution be moved. Moved by Mr. Webby, seconded by Mrs. Moss Solomon. All in favor?
Aye.
Against? I declare the motion carried. I'm sure that all stakeholders present, as well as the management and staff of the company, will join me in expressing sincere appreciation to the members of the board of directors of your company for their dedicated service to the company and its stockholders throughout the year. We are very pleased to have two executive directors present in person this afternoon. I take pleasure in introducing you to the Group CEO, Mr. Donald Webby, and Mr. Andrew Masada, the Group Chief Financial Officer. We also have joining us online the following non-executive directors: Mrs. Mary Ann Chambers in Canada, Dr. Paris Loayi Jr., Mr. Everton MacDonald, who is chairman of our audit committee, Dr. Indiana Minto Coy, Mr. Peter Moses, and Mrs. Gina Phillips Black, who is chair of the Corporate Governance and Nominations Committee. I will now call on the Group CEO to make a presentation on the performance of the company over the year ended December 31st, 2019. He will be given an overview of the 2019 performance and first quarter of 2020. He will also be sharing with you on future strategies. I think Mr. Webby will be joined by Mr. Andrew Masada, our CFO, in the presentation of this report. Mr. Webby.
Thank you very much, Mr. Chairman. Good afternoon, all our shareholders, our friends who are joining us online. Our Chief Auditor from Pricewaterhouse, Peter Williams, is here. Welcome, Peter. So the slide I'm showing there, we decided as an executive team that we would want to display, because we're all very proud of them, our brand ambassadors of the GraceKennedy Group. So you see Shelly Ann, Fraser Price and her son Zion, Hansel Parchment, world-class hurdler, Aliyah Atkinson, and of course our latest addition to our brand ambassadors is Ding Dong, who, as you know, is a very popular dancehall artist. So my presentation this afternoon, colleagues, will be divided basically into 5 sections: executive leadership, business highlights, financial performance. I'll share a little bit about our strategic drivers. And something that we are all very proud of at GraceKennedy is our corporate social responsibility. Here you see our executive leadership team. I recognize and welcome again Andrew Mesada, who is here with us personally, our Chief Financial Officer, and Gail Solomon, our General Counsel. Thank you very much for joining us. And my team, as you're seeing there, they're all online looking at the presentation very carefully, I'm sure. But we have a great team at GraceKennedy, and I'm very proud of all of them. I wanted to, I think quite appropriately, start my presentation on COVID-19, which has really impacted the world significantly. And if you look at the timelines there, it really displays how it has impacted the world in a short space of time. And of course, your company, GraceKennedy. So the first death outside China was on February 2nd, 2020. And the WHO declared COVID-19 a pandemic on March 11, 2020. That is just 77 days ago, colleagues and friends. 77 days ago, that was when the WHO declared COVID-19 a pandemic. I think on a whole in Jamaica, we now have 566 cases with 9 deaths. And I want to use this opportunity to recognize and congratulate the government, the Ministry of Health, and more importantly, I think, the frontline workers who really have done an excellent job in Jamaica. I want to just speak a little bit about COVID-19 and the AGM, and I know our chairman covered it quite well and in a fair amount of detail. But in determining having the AGM today, we have had several discussions. The chairman and myself and Gail and Gina Phillips-Black, our corporate governance chair, and others, lawyers, the stock exchange, companies, registrar, and others. And I'll share with you the main decision points where we are here. The health and safety of all Jamaicans is paramount. That is the first thing. These are unprecedented and unpredictable times, and the truth is, we don't know when these restrictions will end. GraceKennedy is an international company with operations in Jamaica, UK, Canada, USA, and all across the Caribbean. We have, with our bankers and other important stakeholders, a statutory obligation to have our AGM on time. You know, in doing my research, this is the number that I came up with, which I found very, very interesting, colleagues. GraceKennedy has shareholders in 24 different countries across the world. 24 different countries across the world. And I'm very proud to be standing here because this is the first time in GraceKennedy's history, we're 97, 98 years old, where our shareholders all across the world have an opportunity to participate in our AGM because we are streaming live. You know, we have this saying, Chairman, that Jamaicans they're everywhere. Well, GraceKennedy shareholders, they're everywhere. We have shareholders in West Africa, in Australia, in Israel, in Italy, in China, and in Japan. And how we know it? Because we pay them their dividends on a quarterly basis. So, you know, in thinking this through and doing the research, what we are seeing here today is probably history. And, you know, I've heard the term being used quite a lot in terms of the new norm. Well, in fact, this could become the new norm in terms of GraceKennedy live streaming, so all our shareholders throughout the world can participate in those 24 countries. We also looked at what other companies are doing in the world. So Coca-Cola and Nestle, they had virtual meetings. As the chairman said, we're not having a virtual meeting. We're having a physical meeting with closed doors. And that's exactly what Barclays Bank, one of the largest banks in the world in the UK, has done. They had a physical meeting with closed doors. I want to say again, more sincerely, to all our shareholders and everybody listening to our presentation and the AGM, I really want to thank you for supporting our AGM in this revised format. And we look forward to hosting you in person at our next meeting. And I want to recognize Gail Masalman, our corporate secretary, who really believed that this was the right thing to do and worked hard all weekend, Gail, to get this done. And I really want to recognize you for your efforts. I also had the pleasure of speaking to one of my favorite shareholders yesterday, a long discussion. I call him the champion of the minority shareholders, Mr. Orrit Staple. And I explained to him what was happening. And I said, Mr. Staple, I'm going to miss you this year. You have any questions? He said, hold on a minute, Don. And he was off the line for no more than 30 seconds. Then he said, yes, Don, page 258. Why is it so? And he gave us about 7 or 8 questions. So, Mr. Masada and Chairman, I'm sure we're going to be answering Mr. Staple's question. But Mr. Staple, thank you very much if you are listening for participating in that way. So, colleagues, the world has changed. And one may ask the question, investors, shareholders, how is GraceKennedy handling COVID-19? And I'd say to you that we were well prepared. Our business continuity plan was activated on January 29, 2020, and every subsidiary in the GraceKennedy group, we have a business continuity plan, and there's a special section in there about a pandemic. So it was easy to activate because we were prepared. The second thing that we did, we established a global multidiscipline steering committee, and that was established on March 3rd. And remember, March 11th was when WHO announced it as a pandemic. So we were well in the preparation mode for that. That steering committee actually meets and is chaired by Leanne Bruce, our risk manager. They report to me basically on a daily basis and formally on a weekly basis, where we have a Monday morning meeting to report how are we doing in terms of navigating through this crisis. We have also said our number one priority in this crisis is to ensure the safety and well-being of our staff. 60% of our staff is now working from home. 60%. And remember that we are a manufacturing company, so there's a need that a lot of our staff cannot work from home. And I can tell you something, we have 6 factories operating, and they are going full speed to meet the needs of our Jamaicans and supplying food. And we are very, very proud of that. And I want to take this opportunity again to recognize all of the GraceKennedy staff working in our manufacturing sector. I want to big them up. The other area that we have said that was extremely important was our supply chain, that it should remain robust and consistent. We made a decision very early on. I said, in any crisis, any pandemic, it is important that you have more stock than less, so we don't run out. And Zach Mars and his team, they have been doing a fantastic job. Managing our liquidity, cost containment, and cost reduction. Very important. As we would say, cash is king. So every Monday, we go through our banking lines, our cash flow, receivables, inventory, etc., and look and see how we can reduce costs to ensure that your company, the GraceKennedy Limited, remains strong and viable, because this too shall pass and we shall come out stronger. Identifying opportunities in the crisis, and I'll share a lot of those throughout my presentation. And most important, and I have dedicated 2 slides to this one, giving back to our communities. That is in the DNA of the GraceKennedy Group. Pre and post-COVID, we are always giving back to our communities. Let us look at the business highlights now. 2019, colleague, fellow shareholders, friends, was a good year for the GraceKennedy Group. It was a good year for the GraceKennedy Group, and we are proud of our achievements. You'll see my chairman, Prime Minister Holness, and Don, opening our building on May 29th, one of the most beautiful buildings in downtown Kingston. Our commitment to downtown Kingston, where we invested $3.2 billion, and we are very happy with the end product, and it's actually working very well. In December of last year, the Jamaica Stock Exchange recognized us with the most prestigious award at their function, the Governor General Awards for Excellence. We also won the best annual report, and there's a, if you see me smiling, Mr. Chairman and Andrew and Gail, there's a story behind this one here. So a few years ago, Simone, I think you were a part of that. My team came to me and said that, boy, Dan, if we're going to win this best annual report, because I told them I want to win it. If you want to win this best annual report, we need a bigger budget. I said, all right, fair enough. Gave them the bigger budget. And I was there getting ready to stand up and go to the award stage to collect the best annual report. So I heard 3rd place, no GraceKennedy. 2nd place, no GraceKennedy. So, you know, when you're getting excited, and the winner is Prof. No GraceKennedy. So I said, all right, I'm going to cut the budget for 2018, 2019, because it takes cash to cure, but we spent a lot, and we never come 1st, 2nd, or 3rd. So there was I sitting down, December. Best annual report, GraceKennedy. So I said to my team that, you see, it takes cash to cure, but it don't really take cash to win the annual report. Remember Simone? Congrats Simone and Gail and the team. I always wanted to get up and win that annual report. I was getting jealous of NCB and others. Grace and staff, and I'll speak to them later in my presentation. There is Jimmy Masalama and Tankita, myself, we celebrated our 40th anniversary. Our latest acquisition, Key Insurance, going extremely well. I need to recognize Stephen Whittingham for carrying us through this acquisition. And Canopy, our joint venture with my good friend PB Scott, is also doing very well. Sean Scott is the managing director, and it is actually, colleagues, shareholders, surpassing our expectations significantly in terms of the performance. Let us now look at 2019 financial highlights. For group revenue, the company did well. You recall a few years ago, I publicly announced a target of 100 billion by 2022. I'm very happy to announce to our shareholders at the AGM that we surpassed it 2 years in advance, where our revenue was $103 billion, 6% increase over the previous year, and 5.5 billion in terms of dollars. So that was, in our mind, an excellent performance. If you have a look at the pie chart there, here, you will see that 55.7%, let me do it again, I like this bossy thing, 55.7% of our revenue came out of Jamaica compared to 53.1% for the previous year. The truth is that our Jamaican, our domestic businesses for 2019 performed exceptionally well, especially Grace Foods and Services, which is our food business in Jamaica, really outperformed themselves and showed significant increases in revenue. So our overseas business is growing in terms of revenue, but our Jamaican business is growing faster than our businesses overseas. And really, I need to congratulate my team at GFS, the Grace brand. As we said, the mackerel, the corned beef, the Vienna sausage, it sell off. Did fantastic in 2019, and it continues to do well. In terms of profitability, we made a profit of 5.1 billion. There's some amount of normalizing there, and Andrew will explain that to you. But one of the numbers that I've always kept my eye on is the 43% increase in profits before other income, excluding IS expenses. And I'm sure Andrew will get into the details of those numbers. 2020 has really started off well for us at the GraceKennedy Group. Even pre-COVID, we were way ahead of our target from early as February. I've not seen these sort of numbers for GraceKennedy for a little while, where our first quarter revenue was $28.8 billion, an increase of 11.3% or $2.9 billion. It is important to note, colleagues, that growth came across all business segments. So all the segments in the GraceKennedy Group grew in terms of revenue. Profits, I guess this is one of the most important charts for us as an executive team, because I can tell you, we have been working very hard along with the board of directors to achieve these sort of numbers. And we are proud of these numbers. Yes, COVID-19 in the latter part of March had an impact, but it shows that we can navigate through a crisis. But these numbers are really outstanding, where our profit before other income increased by 42.8%. Profit after tax increased by 44.7%. And profit before tax increased by 50.6%. We reported profits for the first quarter for 2020 of $1.45 billion, an increase of $436 million. Again, I'd like to recognize the GraceKennedy team and the board of directors for these results. I'd now like to share with our shareholders and members who are viewing this presentation a little bit more about our strategy going forward and what is the future looking like. So we have our vision and mission. We have met as a team. We have decided that we are not going to change our mission or vision. But what we decided, and we said that we need to focus, is on brand building and innovative solutions. And most importantly, colleagues, by highly skilled and motivated people. In terms of our vision statement, we can have all the terms of global consumer group and shareholders value, but unless we have a highly skilled and motivated team, we will not realize our vision. And that is something that I certainly feel strongly about. Remind you, when we speak about a global consumer group, we're speaking about 60% revenue outside of Jamaica. You'd have seen from the earlier chart that we're in our 40s. 50% group profits derived from outside Jamaica. We're just under 40. So there's some work to be done in terms of us meeting that visionary target of being a global consumer group. Here, so we have created a vision. And we spend a lot of time creating this vision. But when you have a vision, you must have strategy, focused strategy supporting that vision. And we have highlighted 4 strategic pillars in the GraceKennedy Group that we're going to be focusing on to ensure that we deliver and maximize shareholders' value to you, our shareholders. The first one being consumer centricity and innovation. We really need to have that wow experience, anticipate the needs of our consumers, and be innovative in terms of providing them with product and services. Operational excellence. When we compare ourselves as GraceKennedy in terms of financial ratios, we benchmark against the best in the world. And we have created matrices that we are benchmarking our operational excellence against best practice in the world. Growth and sustainability, I've already said that mergers and acquisition is going to be a key strategy for the GraceKennedy Group in terms of growth, and a performance-driven organization, which is all about our people and creating this culture of accountability and execution and reward. So we have our vision, we have our strategic drivers, and we are now moving to the stage of creating, developing the 2030 campaign map. We speak about the global consumer group, we speak about our return on equity. But I want to share with you some important questions that we ask as executives, and the board asks us as executives. And if these questions are answered and will be answered in our 2030 campaign map, I can assure you that the GraceKennedy Group is going to be stronger than ever. And I want to share them with you. How can we use innovation? How can we use innovation to enable strategy? How can we ensure that we are truly consumer-centric? How do we create an environment which enables our people to deliver superior results? And finally, how can we maximize shareholders' value? This is the discussion, this is the strategy, these are the questions that we have asked ourselves to develop the 2030 campaign map. And Mr. Chairman, we are hoping to deliver that strategy to you, the 2030 vision, before the end of this year. And I think it's going to be very exciting for all. And I'll present at the next AGM the 2030 vision of the GraceKennedy Group. So you recall, in 2013, 2014, I addressed the shareholders at the AGM at 73 Harbour Street, and I spoke about an acquisition that we were doing. We refer to the acquisition as the Lafayette acquisition. I showed this chart where you would see the Lafayette brand there. Let me see if I can highlight it. Lafayette there. And you see a number of other brands. You see a number of other brands there. Conchita, La Castana, and things. And I said to the shareholders that the GraceKennedy strategy is very clear. And it's very simple. Think about it, that this Hispanic market in the USA is over $10 billion. And I think that's on the conservative side. Probably much larger than that, because Hispanic has a bigger definition. The Caribbean market, out of all our research, the Caribbean food market, at the highest I've seen it is 500 million. So we have this Jamaican company. We have acquired a Hispanic brand, and we are saying that we want to play in this 11 billion market. Caribbean market, we are already market leaders with the Grace brand. So I show this chart here where I'm saying our strategy is clear. We want the Grace brand and the Lafayette brand to break out and be the number 2 brand in the United States of America in terms of the ethnic population. So now you have the Grace brand and the Lafayette brand playing in a market that is now over $10 billion. And how have we done? It was, and Professor Shirley is the chairman of that company. LLC, we're all very proud, showed significant improvement in profitability for 2019. The Grace brand, since acquisition, is growing by 39% since 2015. The Lafayette brand, while we had to do some reorganizing of the Lafayette brand, is poised for growth. And the revenue between acquisition, and now is 18 million US dollars. So we are now moving in the right direction to execute on our strategy of being that number 2 brand playing in a much bigger market. And I said this company here, if we execute right on it, is going to be a game changer. This is what we have done in terms of ensuring that we deliver to you, our shareholders, a proper return on your investment. We invested $5 million US in a new facility, and I'll show you a video shortly. Hopefully it works. That shows that we are really playing as a first world company in a first world environment. Our distribution, and those of you who are listening from the United States of America, I'm sure you'll be nodding your head on the WhatsApp and the emails and the tweets that I get, how proud they are in terms of our company, our products being shown all over, being accessible all over. So when you look at Walmart, we are in almost nearly every Walmart, Publix, Target, ShopRite, and the list goes on. So we are now in the mainstream of the aisles in terms of the Lafayette and the Grace brand. We also relaunched the Lafayette brand, as I said before, modernized the label, and it's a much more attractive packaging. We improved our operational efficiency and our margins and our new product innovation. And there's one that I'll speak about. But let me share this video with you. Every time I see that video, I get goosebumps when I see that Grace Jerk chicken, Grace Jerk sauce pulling out of our new headquarters in New Jersey, getting ready to deliver the Grace products to Walmart and ShopRite. It's really, really a great feeling. You know, one of the success stories behind our business in the USA is actually the Grace patties. You remember 2 years ago we purchased our 49% share in our patty manufacturer called Majesty. The Chinese family who migrated to Canada and found their way to Florida started a patty business and invited GraceKennedy to be shareholders in the business, and we gladly said yes. Our patty business is growing unbelievable. I think since that acquisition, the growth of our business is well over 200%, and it continues to grow. And Chairman Derek has said to me that it has now truly crossed over from a Caribbean product to a mainstream product in terms of our market research and intelligence. Hispanics are buying our patties. And I tell you, and I know I may be a little bit biased, my colleague shareholders and those watching, but this is actually one of the best patties in the world. It's really, really nice. The spicy beef is fantastic. Fantastic. So those of my colleagues in the USA, I would encourage you to try the Grace patties. In terms of another strategy and innovation that we're using, and that we are going to be really focused on, is what we refer to as financial inclusion strategy. And this is very clear. I think Michael McNaughton, yes, it was Michael. Sorry, Maurice McNaughton from the University of West Indies did a study, and those figures that I'm showing there is actually quite staggering. 86% of Jamaicans are either unbanked or underbanked. And we are saying that that presents a significant opportunity for the GraceKennedy Group. And I know, as we say, what is good for Jamaica is good for GraceKennedy, and vice versa. So our strategy is very clear. We have established a brand, GK1, with 20 locations throughout the island, and we're going to be increasing it more. Well, it's going to be 20 by the end of 2020. And we're going to be increasing it more to ensure that Jamaicans have access to first-class banking. You remember when I mentioned earlier where there's a crisis, there's an opportunity? Well, the government announced a compassionate grant. And they gave two choices. One choice was that you could use a remittance company. The other choice, you could get your funds lodged directly to a bank account. When I saw the numbers from Grace Burnett and Margaret Campbell, I was almost speechless. 80% of the recipients of the compassionate grant wanted to use GraceKennedy or Western Union. And when I sat down and I thought about it, Chairman, I said this is one of the biggest compliments that we can get at the GraceKennedy Group. These people trust us. Honesty, integrity, and trust. That's a big, big compliment. When somebody trusts you with their compassionate grant, 80%. Just a quick update, we have paid out 90% of those funds. And where there's a crisis, there's an opportunity, financial inclusion. Mariam McIntosh Robinson, we have actually established 11,000 new accounts for First Global Bank. So hopefully that 86% with us establishing 11,000 accounts will go down. I believe, colleagues, along with our remittance business and banking the unbanked, is going to be a critical strategy for GraceKennedy to grow significantly in the financial services sector. And I may say I use this term a lot, but I believe that this could in fact be a game changer for the GraceKennedy Group of companies. And let me congratulate Margaret Campbell and Grace and Mariam and Stephen and others for really focusing on this financial inclusion strategy. And if you think about it, I would think that most of that 86% Jamaicans that are either unbanked or underbanked are actually buying our food business. So this is a relationship, a lifelong relationship that we want to form with our fellow Jamaicans. In terms of services that we are, one thing that this pandemic showed up is that the future of delivering product and services is going to be in the digital area. We were already doing a lot of that. Who.com, Direct to Bank, and Bill Express. I'm going to share with you, who I've shared with a number of people, about where there's an opportunity, where there's a crisis, an opportunity. Mr. Auditor, the first week in March, and as you know, remittance is a big earner for the GraceKennedy Group. New York lockdown, Florida, Canada, UK. Our numbers were staggering. For the first 2 weeks in March, compared to the previous year, our remittance inflows, the inbound, was down 30.4%. And the direct to bank was probably growing at 15%. And we huddled as a team, including Western Union. And a basic question was asked, why would somebody in New York, in this pandemic and this cold, leave their house or their home to find a location to send money to another location in Jamaica? And we decided that we're going to focus our resources, all our resources, marketing, HR resources, and direct to bank, where you can turn a yard and send your money to a bank account in Jamaica. To cut a long story short, as I stand here addressing the shareholders of GraceKennedy, as of last week Friday, our remittances are up. And listen to this, the direct to bank is up 184%. Where there is a crisis, there's an opportunity. We're focused on the digital part of remittances and is now paying dividends. And that has a big part to play why our numbers are looking so good. So that is stage one, and that is here. But we want to take it a step further at GraceKennedy. We have created what we call the GraceKennedy ecosystem, where we have Western Union, our GKVR rewards card, which is about 130,000 members now, and all our companies, primarily in financial services and high-low. And what we want to do is to have a digital integration for this GraceKennedy ecosystem. So phase one, we're going to be doing a prepaid card. Phase two, mobile wallet. We're probably going to be reintroducing a much improved GKMPay and then a mobile app. And I'll say to you, colleagues, that what is being displayed is the future. And you know, sometimes when you speak about future and strategy, sometimes it comes across as it's nice to have. But if you're going to be playing in this ecosystem, digital delivery of products and services is not nice to have anymore, it's must have. And I've said to my team, headed by Stephen Whittingham, tell me what resources you need, both HR and capital, and you're going to get it. I believe so strongly in this strategy. The third or fourth part is about investing in human capital. And I'm going to spend a lot of time on this. But if you think about this, the most important asset that GraceKennedy have, Mr. Auditor, the most important asset that GraceKennedy don't have no IAS or IFRS. And it's not even on my balance sheet. And I'm an accountant. The most important asset, the greatest asset that the GraceKennedy group has is our people. Our people. And that's why I said in terms of our strategy, highly motivated staff. Listen, when we say the 50% growth in the GraceKennedy Group's profits for the first quarter, and Don Webber stands up and delivers it, right? I'm basically the messenger. The real heroes of that 50%, colleagues and friends, are the people on the front line, are the people in the distribution center by Bernard Lodge that is picking the corned beef and the marker that sell off to ensure that the Jamaican consumers and consumers all over the world receive those products. Those are the real heroes of the 50%. Or the staff at the high-low supermarket. Those are the real heroes. The cashiers. Those are the real heroes of that 50%. Or remittance folks that sometimes with a large crowd come under a significant amount of abuse. Those are the real heroes of the 50%. It's not Don Webby. It's our frontline workers who were brave and showed risk their own safety to ensure that GraceKennedy remains a strong and viable company. Those are the real heroes of those numbers. One of the things that Sidonia was very pleased about is the engagement score. So every other year we do an engagement score to see how engaged our staff is. And the 2019 engagement score was the highest it has ever been in the history of GraceKennedy. And that is why we are showing such great results. So in wrapping up my 5-part section, colleague shareholders and those of you who are listening to this presentation, those who know me know that corporate social responsibility is in our DNA at GraceKennedy, and it's something that is very sacred to me. What is sacred to me is that slide, GraceKennedy, we care. And that is why, through all the pandemics in the world since 1922, Andrew? Spanish flu and all the tragedies of the world, and now COVID-19. That chart there of we care, that is why GraceKennedy remains one of the strongest companies, not only in the Caribbean and the world. It's not only about the numbers, but what is in your heart, that GraceKennedy, we care. And that is why I'm so confident that this too shall pass and GraceKennedy will come out a stronger company. But before wrapping up, let me just show you what some of the foundations are doing. GraceKennedy Foundation by President Caroline Mahfood, chaired by Fred Kennedy. In terms of our feeding program at the university and UTech, 150 students being fed. We celebrated, as I said before, 40 years of supporting community. This is another target for me, Mr. Chairman. I remember that I wanted by 2022, GraceKennedy to be sending or supporting 1,000 children or students. We're now at 600. So over the next 2 years, I would like to add another 400 and ensure that our children get the opportunity for a proper education. Champs, this is one of the hard decisions that we had to make at GraceKennedy, along with the Ministry of Health, Ministry of Education, ISA, where we had to postpone Champs for 2020. But I'm sure all of you listening would agree that was absolutely the right decision. And that's why, it suits you to listen to the technical people about that. But 2021, 2022, Champs is going to be bigger and better. I can assure you about that. Our household helpers awards, Minister Grange and the two winners and myself, that was a very, very nice function. And we have done a lot with COVID in terms of our community response. We donated 10 million for a ventilator for Jamaican hospitals. And we donated to the Jamaica Constabulary Force and the Jamaica Defense Force in terms of aiding, in terms of food. And not only in Jamaica. We assisted in the USA, Canada, UK, and of course, HILO gave discounts to the staff, senior citizens, and healthcare workers. Giving back is so important, and as I said before, that is why GraceKennedy is such a strong company. Finally, on the community response, I am happy to announce today at our AGM that GraceKennedy is going to be donating 5 million Jamaican in the first phase of tablets and laptops to schools. I've asked Gail Masalomon to chair a committee, and she has had discussions with the Ministry of Education and our foundation. But I want to do this as soon as possible. And that's another thing that this pandemic has showed up, right? That there's a lot of need in our society, and if GraceKennedy can play a role, we will. You have heard me before, Andrew. Education, and I'm sure the Honorable Prof would agree with me, education is not a privilege, should never be a privilege in Jamaica, it should be a right. Every child, wherever they are born, should have proper education. So GraceKennedy is going to play our part in ensuring that that happens. So Gail, you have some money to spend to buy the computers and the laptops for the children. And as I said to you, that's the first phase. So in closing my presentation, colleagues and my chairman, let me say that as an executive team, we would like to thank our employees, and as I said before, and other frontline workers for their resolute commitment and hard work, showing the true GraceKennedy spirit of we care. Despite the uncertainties presented, we are confident that we will emerge stronger together from this crisis. We'd also like to take this opportunity to thank all stakeholders, especially our board of directors, who have been very supportive of the executive team in terms of helping us to navigate the journey, guided by our core principles of honesty, integrity, and trust. Thank you very much, everyone, and hopefully we'll be breaking bread and shaking hands this time next year. Mr. Chairman, I'm going to hand straight over to Andrew for his presentation. Andrew, over to you.
Okay, good afternoon, everyone. And after that very stimulating and exciting presentation about our strategies and what we're doing by our CEO, if there's anything good coming out of this meeting, it's that you don't have to hide your yawning when it comes to me talking about the hard, cold numbers. So you can rest and be comfortable, but I'll try not to put you to sleep. So I'd start off by saying that 2019 was a very successful year for GraceKennedy. Let me just go to the key highlights of our performance. And what you see there is, as our CEO mentioned, for 2019, the group achieved a milestone in earning over $100 billion in revenue, a first for the group. In addition, our profit before other income was up by 19%. And profit before other income is a key measure of your operating performance, your core operating performance. And so we're very pleased about this double-digit increase. Now, net profit after tax was down, mainly because of a one-off gain that was recorded in 2018, and I'll expand on that in my next slide. Assets grew by over $19 billion. And our market capitalization, that grew by $5.9 billion. And this is a reflection of the increase in the stock price of your company shares. Dividends, you may recall that last year we announced a change in our dividend policy where we started paying dividends 4 times a year, an increase in the frequency of the dividend payments. And in addition to that, we also increased the amount paid out. So last year we increased dividends by $199 million, or 14.9%. And as for those who are following, you will see that our next dividend has been announced. So our dividend, the next dividend coming up for 2020 is going to be paid on the 15th of June, approximately $250 million. So you can look out for that payment. Now, in terms of some significant items I want to highlight for 2019, the first item I want to mention is IAS 19, which has to do with our post-employment benefit expense. This item actually increased by $890 million to $1.22 billion. Now, it's a non-cash expense, and it's really driven by some changes in actuarial assumptions, which would have recorded this increase. However, as I mentioned, it is a non-cash item. Secondly, in 2019, there was a new accounting standard that was adopted by the group, which is IFRS 16, the standard on leases. And this resulted in an additional expense of $228 million for the year. The third item I'd mention really relates to the prior year, 2018, when there was non-recurring gains of approximately $1.1 billion, which really had to do with acquisition and liquidation gains in 2018. These were non-recurring, so they didn't occur again in 2019. Now, as I mentioned about our operating performance being up by 19%, this, of course, is after taking into account some of these significant items. So if we were to normalize the results for the IAS 19, that non-cash expense, you would see that instead of the profit before other income growing by just 19%, it actually increased on a normalized basis by 43%. Significant increase in our core operating performance. And then if we were to look at all three items mentioned in the significant items above and look at our pre-tax profit on a normalized basis, you would see that our profit before tax would have actually been up 23% or $1.4 billion. So very strong operating performance for your group in 2019. I just want to go in a little more detail in terms of the performance of the individual segments. So we already talked about the milestone of $100 billion being earned, and it was a contribution by all the segments. So all four of our operating segments showed increases in revenue for 2019. And what you'll see is that 3 out of those 4 recorded very significant growth over the prior year. First, we want to talk about our food trading companies. And locally, a lot of our brands did very well. Catherine's Peak, which was an acquisition in 2017, you'll see 2018, you'll see in 2019, had good growth. Our core products like Vienna sausages, coconut milk, mackerel and corned beef also showed good growth in 2019. And our high-low food stores also did very well in 2019. After the roadworks that were in the Barbican area ended last year, we saw strong growth for our Barbican store. And then Portmore and our Ligonier locations also did well. And overseas in the USA, our Grace brand grew by 10% last year. For the banking segment, our loan portfolio continued to grow, and we saw improved interest income coming from that growth. And then in our investment services area, our fund management, advisory, and stockbroking fees increased with the growth in that business. On the insurance side, motor and property portfolios both grew, which contributed to the increased revenue for the insurance segment. And then on the money services side, we saw marginal growth, which really was because we focused on enhanced compliance measures to protect our customers from any potential fraud. And therefore, we believe that investment in enhanced compliance will lead to better performance going forward and confidence that our customers can have in our brand and when they send money through Western Union. On the profit side, again, we saw all 4 segments showing increased profit for 2019. And of note, 3 out of those 4 segments grew by double digits. And we're very pleased with the performance. In terms of the food trading, as I mentioned, the growth in revenue also went to the bottom line. And we saw improved gross profit margins. So not only did we have better sales, but better sales per dollar. In banking and investments, again, it's really a contribution from the banking side in terms of the growth in the loan portfolio, as well as higher foreign exchange trading gains. In terms of insurance, it's growth again from our portfolios, motor and property, as well as improved investment gains that have been made by that segment. And for the money services, not to be left out, they showed improved profits, mainly through improved operational efficiency. Then you may ask, on the balance sheet, how have we done? So one of the key things I would say in relation to the balance sheet is there were 2 key milestones. So for revenue, we mentioned over $100 billion milestone. On the balance sheet, the assets of the company for the first time grew to over $150 billion. And our equity grew by a significant amount, over $5 billion, to over $50 billion. So again, 2 other milestones on the balance sheet. In terms of the assets, 3 main areas we saw increases in. or fixed assets grew, partly because of the adoption of a new IFRS 16 leasing standard, which brought on the right of use for leased assets. But we also had additional capital expenditure, which I will go and speak about later on the next slide. And then for our banking segment, we saw significant growth in our loan portfolio to over $30 billion in loans dispersed to customers. And thirdly, our pension asset grew significantly from $3.3 billion to $5.8 billion. So those were some of the key highlights of the contributing to the growth in assets for 2019. Now, in terms of our borrowings, you would see that borrowings also went up. That's partly because of the adoption of IFRS 16, which requires us to show the lease obligation on our balance sheet. Nonetheless, what you will see is that the debt-to-equity ratio at 45.9% is still a moderate level of debt, and we actually have quite a bit of capacity to continue to grow, to borrow if need be. And in particular, it puts us in a strong liquidity position in these times of the COVID-19 situation, where in the event we need to borrow, we have the capacity to do so. In terms of capital expenditure, as I mentioned, for 2019, you see a significant increase in capital expenditure to $6.2 billion. Some of the key highlights for that, the first one I would mention is based on the video that you saw from our CEO about the new warehouse in Woodbridge, New Jersey. And that we recorded at $2.9 billion in terms of the right of use value of the lease of that warehouse facility. And then we also had the completion of this new corporate headquarter building. An additional $500 million was spent in 2019 for that. In terms of our factories, we also spent on our canning factory, our meats factory, as well as our national processors factory. And then the addition of a new factory last year in Denby to do the canning of akis and other vegetables. And in that also contributed to our capital expenditure. Combined, the factories in Jamaica, we spent over $300 million to upgrade them. Our high-low food stores, we added a new store right on this very building in downtown Kingston. We increased the store count by that new downtown store. And then we also did upgrades for other stores. That came in at just under $200 million. And then our distribution center, Bernard Lodge, St. Catherine, we did some capacity expansion in order to accommodate more products that we could sell to our customers. Just under $300 million spent on that. Those are the key highlights for capital investments made for future expansion. Lastly, I'd like to focus on some of the highlights for first quarter. As you heard from Don, we had very good performance for 2020 in the first quarter. On the revenue side, all 4 segments showed increases in revenue. And what we saw is that this was led by our food division. On the international side, all our international companies in the major markets showed increases in revenue. So in the US, in Canada, and UK, as well as locally, our distribution companies did very well. And high-low also saw growth. For our banking and investment segment, we did see improvements because of the growth in the loan portfolio. And for insurance, our motor portfolio grew. In terms of profits, this is up 50%. For the segment results, what we saw is 2 out of the 4 segments showed growth. The growth areas, of course, you would see the significant growth in foods, as well as in the purple bar, money services. And for our food companies, as I mentioned earlier, coming from strong revenue growth and also improved margins. And for money services, continued improved operational efficiencies. So The other thing I'd mention is that for insurance and for banking and investments segments, we did see a situation where the value and prices of equities fell in the first quarter of this year, primarily due to the COVID-19 pandemic and the uncertainty that that has brought about. And that would have negatively affected those segments because the change in value of those investments would have been recorded through the income statement. And then generally, because of COVID-19 and the increase in credit risk, we have made provisions for loans receivable as well as bad debt provisions for or regular receivables in the event that there is some level of fallout. So this was also factored in our first quarter results. But overall, we're very pleased with our first quarter results, and we look forward to the days to come and the resumption of a situation where we can have you back with us. So thank you very much, and these are the end of the highlights.
Thank you very much, Don and Andrew, for those two very interesting presentations. Ladies and gentlemen, we will now go into the question and answer period, and as I indicated earlier, we have allotted additional time given the new format of the presentation. However, if we are not able to answer all the questions in time, we will post answers to all the questions that we receive on the GK website. For those of you viewing the proceedings live, if you still have questions that you have not yet sent in to us, please send them via email agm@gkco.com. When Don started his presentation, there were approximately 143 persons online. By the time Andrew started his presentation, that number had increased to over 200 persons. And several of you have already sent in some questions. There are some that are for clarification, is what I would refer to them as, and I think there are two important ones that I'd like to direct to Gail Moss-Solomon to begin with. Gail, when I asked the question, would you please advise if a quorum is present, your mic, when you answered, was not yet turned on. So I'd like you to repeat the response to that question. Can you do that?
Yes, Chairman, I will. Thank you very much. I can confirm that we are, in fact, quorate. Our articles require at Article 63 that we have 3 members present in person. I'm happy to say we have 5 shareholders in the room with us today, and we also have 84 persons attending by proxy.
Thank you very much, Gail. A second question along the same lines. Is this AGM allowed based on JSE, the Jamaica Stock Exchange's release, and the Companies Act?
Yes, Chairman, I've been answering that question a lot recently, so I'm not surprised it has come in. If I could paraphrase, the simple answer would be yes, our AGM is lawful and legal. GK would not proceed otherwise. As both yourself and the group CEO indicated, we are not having a virtual AGM because virtual AGMs are not permissible under Jamaican law. What we are having is, in keeping with our articles and the Jamaican law, a meeting in person. It is, however, closed to the public, unfortunately, because of the unique situation that we are in now and because of the disaster risk management orders, which limit the number of persons to no more than 10. But yes, Chair, we certainly are lawful. What I would say also is that GraceKennedy is unique in that our quorum is only 3 persons, which is very unusual for a listed company. And so that distinguishes us from many other companies who have quorums of 15, 20, even 30 for their AGMs. And so they unfortunately are not able to proceed, or else they would be in breach of the DRM orders. But our registrar is here. She can confirm that we are within the four corners of the law. We issued our notices in keeping with the legislation. We invited persons to vote. We are answering questions now. We are in keeping with the requirements.
Thank you, Gail. I guess you could say our forefathers showed unusual foresight when they decided on a quorum of 3.
Yes, Chair, we are grateful.
To Don or maybe Andrew, Mr. David Rose asks this question. When will the 65% of the key acquisition be recognized in the profit and loss statements? Also, was the loss before tax for the insurance division attributable mainly to the unrealized losses in investments?
Thanks. So David, thanks for that question. The key insurance in terms of P&L impact will be in the second quarter. So the numbers that you're looking at in the first quarter does not include the key insurance numbers. The second question is yes, GKIG, we have an equity portfolio which would have impacted the valuation of the equity in a negative way for the first quarter. I think as we speak, David, the JSC is probably down about 25%, somewhere around there, so that would have impacted our portfolio at GKGI. Andrew, is there anything you want to add? No, thanks.
Thank you, Don. Mr. Anthony Kennedy.
Sorry, Chairman, I should add that the operating performance in terms of the gross written premium and the pure operating performance of GKGI was significantly higher than the previous year. So it's really the investment portfolio that resulted in that negative performance.
Thanks, Don. I'm sure Mr. Rose would have benefited from that response. Mr. Anthony Kennedy, who historically has traveled to be with us for these meetings, has sent in a question, Don. Why has the most recent dividend paid 25 cents given the increase in profits of 50%? Did the economic uncertainty contribute? And are you being conservative because of the second half?
Yeah, thanks, Anthony. And sorry we didn't get to catch up for this AGM. Anthony is always at the AGMs, and we miss you. Let me answer the first part first. You probably would have read, because I know you are based outside of Jamaica, that the Bank of Jamaica asked the financial services companies not to pay dividends in the event that the crisis worsened and that they review it in 6 months. GraceKennedy, as you know, we are a conglomerate where we have a financial services division and a food division. We had significant dialogue with the governor of the central bank and his other technical people. And where we thought that it would be reasonable is that we look at our profits generated from our food division alone and pay a percentage of that profit. And based on the calculations that Andrew submitted and to me and the board, we all agreed that 25 cents per share would have been a reasonable amount to pay given the circumstances. And I think you're correct, Anthony, there's over a 37% reduction in dividends compared to what we paid last year. You are correct, there's a lot of uncertainty in what is happening with COVID-19, and we believe at GraceKennedy it's better to be conservative, and we're going to review it every quarter to see if we can pay more or we need to pay less. So what is being reviewed quarterly, Anthony, and we are committed to looking at our dividend payout ratio to ensure that all our shareholders are happy based on the current situation that we find ourselves in terms of the COVID-19. I mean, Chairman, when you look at the reports from the IMF, the GDP for Jamaica is expected to be down close to 6%, 5.something%. So we don't know. So we have to be conservative in terms of liquidity going forward.
Thanks, Don. Again, I think Mr. Kennedy would have received a comprehensive response to both pieces of his question. We have another question from Ms. Claudia Williams. Her question is, what is GraceKennedy's core business? Money services is the largest contributor to profits. Financial services contributed over 70% of pre-tax profits. Can GraceKennedy continue to say that it is a manufacturing company?
Yeah, so GraceKennedy, let me give you a little bit of a background. 10 years ago, GraceKennedy, we were in the hardware business, hardware and lumber. We used to do airline catering with Berkshire. We were in, at some time, Chairman, we were in travel agency.
Yes.
We made a decision that our core business for the GraceKennedy Group going forward, and I've been very disciplined in terms of core, is financial services and food. So yes, financial services is part of our core business, but also our food business is part of our core business. Traditionally, our GraceKennedy remittance business, or GKMS, the group, we have businesses in 12 different countries. Now they contribute to the bulk of that 70%, about half of the group's profits. So I'm being very focused, as I said, in our presentation, and you heard it, fantastic numbers in terms of growth digitally. Manufacturing, Claudia, is key to the GraceKennedy Group in terms of our food business. And as I said before, our food business is really an international business located in Jamaica. And when you look at the potential growth for food business in the USA, Canada, UK, and even within Jamaica, we believe it is significant. So we have about 6-7 factories. We have Nalpro, where we produce our Grace cock soup and our Grace food drink. Canning, where we produce the best ketchup in the world, the Grace ketchup, tropical rhythms. We have our meat, where the Grace ham is produced every year, Grace Vienna. We have Majestic. We have, sorry, I adjusted the microphone. I don't hear. Is this on? Hello? Okay. We have Majestic, our patty factory, where we own 49% in the US, in South Florida. Hounslow plant, where we are in partnership with the farmers in Jamaica, where we produce our pepper mash. Our new plant, Denby, which was opened last year, where we are now canning our own ackee and our own jerk sauce. And of course, we have our factory, Corwin, in the United Kingdom, which produces our sauces, Encona sauce, and some cock soup. So I would say to you that strategically, manufacturing is extremely important to the GraceKennedy Group, and as a board and as executive team, we have committed to reinvest and modernize our manufacturing plants going forward.
Thank you, Don. Claudia, I hope you got the response you wanted for your question. Each year at our meetings, one of the challenges I have is to rein in a gentleman, Mr. Orrit Staple. Mr. Staple, although we typically would restrict persons to 1 or 2 questions, Mr. Staple normally has a bank of 8 or 10 questions. This year is no different, and he and Don had a conversation earlier today, and Don already introduced the fact that Mr. Staple had sent in his question. So Don, I'm going to just ask you to read those questions that Mr. Staple has presented you with.
Thanks, Chairman, and he was very precise. I think he goes through every page in the annual report. So Chairman, since you're on your feet, and this was the 6th question, page 258 of the annual report, management compensation was increased. Can you explain why?
Yes, Don, and we can explain why. The incentive structure for our executives is designed to incentivize them to generate even stronger performances year over year. So it's hardly surprising in a year when our performance increased substantially that the incentive payments to our executives would also increase during that period. We think that it shows that the system is working. the performance had fallen, the reverse would have happened. And what we hope is that it won't fall, but it will continue to grow year over year as our executives invest their efforts into producing better results which benefit our shareholders, our stockholders across the globe.
Thank you, Chairman. Same page 258, please explain why consultancy service went up for 2019 over 2018. Prof, maybe I can start. The board of directors and me, the group CEO, we engaged a consultant for our financial service division mid-2018, specifically for our bank, FGB, and to be an advisor to the group CEO. So what you're seeing in the annual report for 2018 is half, because the person started half of the year, which was recognized, and 2019 you're seeing the full amount. And I must say, I'm so happy, Chairman, that we made that decision, because the value that we're getting from that consultant is really, really great.
Thanks, Don. I would want to use the opportunity to endorse what you have just said. I think that those resources are well spent, and the improvements that we have seen in the banking sector are a testament to that.
Thank you, Chairman. Page 152, the remeasurement of post-employment benefits obligations moved from a negative to a positive. Why? And I think that's you, Andrew.
Thank you, Gideon. So this is really on the statement of other comprehensive income. And what we saw was in 2018, the pension obligations for the group increased compared to 2017. And this is mainly because there was a reduction in the discount rate. That is the actual assumption about the discount rate moved from 8% in 2017 to 7% in 2018. Now, for the mathematicians online, when you reduce a discount rate, you actually increase the present value of the obligation. And so the negative $2.7 billion shown in other comprehensive income for 2018 is really a result of that reduction in discount rate, which reflects an increase in the obligation. Now in 2019, we actually saw the opposite occurring. So the discount rate actually went back up from 7% to 7.5%, which in effect reduces the present value of the future obligations. And in addition to that, 2019 we saw significant improvement in the performance of the pension assets. So the pension assets also performed well. So you have the obligation going down and the pension assets going up. And that resulted in an improvement in other comprehensive income of that $3 billion. So that's the real reason why we're seeing the shift from a negative position in 2018 to a positive for 2019.
Before you go, Don, let me say that Mr. Justin Burke had asked a very similar question to that. So, Mr. Burke, I hope you got your answer from Andrew to the question that you had raised as well.
Chairman, the other one is page 144. Valuation of real estate property pledged as collateral for term loans. This is most significant repayment source of credit impaired assets. Please explain why.
Thank you for that question, Mr. Staple. So this is really in the section where the auditors are giving drawing attention to key audit matters. So this is part of the audit opinion. And this is really talking, when we talk about the real estate, this is really the real estate held as collateral for loans that First Global Bank has disbursed to its customers. So when a loan reaches credit impaired status, which is a stage 3 status on the IFRS 9, it really means that the customer is not able to service or satisfy the normal repayment terms of the loan. And therefore, the bank has to look to the value of the collateral as a way of settling the outstanding balance. So this is why it's important that the valuation of the real estate properties held as collateral or pledged as collateral is monitored very closely, because this is the value that can be used to settle the outstanding balance of any loans owed to our bank.
Yeah, thanks. Page 14, I'll answer this one, and maybe Andrew can add. Why did the number of employees increase by 39 persons from 1,789 to 1,828 after the restructuring of Project Eagle was implemented at the same time? That's a great question, Mr. Staple. So there are basically two answers. Our warehouse in South Florida, Medley, South Florida, we had outsourced it. In other words, we had engaged a third party to run our logistics at that warehouse in South Florida. After carefully reviewing that arrangement, it was decided that we should do it on our own, and we could become more efficient by GraceKennedy doing it on our own. So a number of staff members were engaged to run the warehouse on our behalf. Andrew, what was the number again? It's
about 29.
29. So Mr. Staple, of that 39, 29 was because of that warehouse change in the arrangement in terms of bringing it back in-house for us running it ourselves. The second reason why was you recall a few years ago we had said that compliance is going to be a competitive advantage for the GraceKennedy Group, particularly focusing on our Western Union business. Well, we engaged Ernst & Young International, and they made certain recommendations to us of how we can really have a first world, first class compliance team in place. So we engaged a number of executives and a number of other individuals to strengthen our compliance team, which was about 8 people. So that would account for 37 of the 39, Mr. Chairman.
Thank you, Don.
There's another one on page 14, and this is a question that Mr. Staple asks every year, and it's such a profound statement about every $1, 6 cents is going to your bottom line. And things. So basically what you're asking is for 2018, 2019, 5 cents flow to the bottom line, and 6 cents for the previous year. So what is happening? So maybe, Andrew, you want to?
Thank you. So in my presentation, I had mentioned that for 2018, we actually had some one-off gains recorded in 2018, which would have shown higher profits because of those one-off gains. But in terms of our measurement of productivity and measurement of growth in profits, we like to look at the normalized results in terms of the core operating performance of the group. So if we were to normalize 2018 by taking out those one-off gains that we had of approximately 1.1 billion, the amount going to the bottom line for 2018 would have been approximately 4.6 cents compared to the 5 cents earned in 2019. So in fact, we actually had a growth in our normalized profits of approximately 9.8%. So on a normalized or core operating performance perspective, we did see an improvement there if you exclude those one-off gains from 2018.
All right, Mr. Chairman, there's one last question from Mr. Stapler. Mr. Stapler, if you are listening, I hope I have done you justice. Page 215, inventories increased for 2019, while inventory written down was recognized as an expense which amounted to 243.2 million. And Mr. Stapler is asking for an explanation.
Okay, thank you. So in terms of inventory, the first part of the question I'll address is why is there an increase in inventory for 2019 over 2018? And the main reason there has to do with the setup of our new factory in Denby. So by setting up that factory, we would have added additional stock from the manufacturer of products. So that's the main reason why inventory is going up. From the inclusion of that new factory in 2019. Then the other part really has to do with why is there then write-off, if there's write-off of inventory, why is it that inventory isn't going down since you've written off some of it, $243 million? Well, what I want to say is that there's not a direct correlation between the inventory at the end of the year and what is written off to the P&L. In terms of how inventory moves throughout the year, what happens is you have the opening inventory, then you add to that all the purchases of inventory you've made, all the stock you've manufactured, and then you subtract from that all the inventory that you've actually sold. So it's more a reflection, the change in inventory is more a reflection of the movement of that stock. It's not merely your opening inventory minus your write-downs. What I would say, though, is that you will notice that for 2019, the amount written off for inventory is actually reduced compared to 2018. And that's really a reflection of good management of inventory in terms of damaged goods or obsolete stock that has to be written off. And we continue to monitor that closely to ensure that we try and keep the amount that we have to write off to a minimum.
Thank you, Andrew. I have a few more questions. The first I'll direct to Gail. Will GraceKennedy adjust its articles for virtual AGMs?
Thank you, Chair. As the Group CEO said, we have to consider that this could be the new norm. And so it is certainly something that GraceKennedy will consider, but we will have to continue to assess the situation. And I think there is also a possibility that the decision could be made for us because the Companies Act could also be amended, which would allow for virtual AGMs.
Thank you, Gail. Mr. Webby, I think I'll ask you to deal with the next question. Will GraceKennedy, will GK General be integrated with Canopy and Key?
So Chairman, Canopy is a health insurance company. Key and Jamaica, GraceKennedy Insurance Company is an underwriting P&C company, property and casualty. So there's no plans to merge Canopy. That is a different business. In terms of Key and GKGI, there are no plans immediately to merge the company in a formal way. However, what we are looking at this time is the synergistic values that two insurance companies can have. So for example, I know the team, they have been in discussions with the reinsurers because we are now a larger company with Key and GKGI, and we have seen benefits from that. I've also asked Grace and Stephen to look at the backroom operation, the IT, the accounting, and other backroom operations to see if there is any value of having one instead of two. Obviously, any decision made, we will need the FSC's approval.
Thank you, Don. The next question, I guess I'll ask you to make a stab at it. Will GraceKennedy, will the GK board take a COVID pay cut? With
the GK board, we have not had any discussions re pay cut, but what I can say that the GraceKennedy normal cycle for salary increase is April 1st, and we decided that every staff member will have a salary freeze, and that will be reviewed in June. I may also add, on behalf of you, Mr. Chairman, that the GraceKennedy Board of Directors and other subsidiary boards agreed to a director fees freeze until further notice.
Thank you, Don. That's an accurate reflection of the status. The final question that we'll take here is this. Conglomerates with diverse businesses tend to be less efficient earners. Will GraceKennedy consider restructuring to increase shareholder value, as currently it earns less margins than other local manufacturers?
Okay, so thanks, Ron. That's a great question, and that's a discussion that we have been having for quite a while at the GraceKennedy Group. The board and the executives of GraceKennedy Group, our purpose is to maximize shareholders' value or unlock shareholders' value. There is an argument that the Financial Services Division would unlock shareholders' value if we decide to list it on a separate exchange. Work is being done on that. Our food divisions and margins, we are working hard, and as you can see from our first quarter results, the margins of our food division has improved significantly. So we are always reviewing, Mr. Chairman and colleagues, the structure of the GraceKennedy Group to see how we can improve profitability and maximize shareholders' value.
Thank you very much, Don. Ladies and gentlemen, we have exhausted the time that's available for our questions and answers. However, as I've said to you, you can send additional questions to agm@gkco.com, and we will post the responses to those questions on the website. We now move to the auditor's report, director's report, and the statement of accounts. The auditor's report, the director's report, and the statement of accounts have been circulated to members. I will now ask Mr. Peter E. Williams of PricewaterhouseCoopers to read the auditor's report. Mr. Williams.
Thank you, Chair. Good afternoon, ladies and gentlemen. Independent Auditor's Report to the members of GraceKennedy Limited. Report on the audit of the consolidated and standalone financial statements. Our opinion. In our opinion, the consolidated financial statements and the standalone financial statements give a true and fair view of the consolidated financial position of GraceKennedy Limited, the company, and its subsidiaries together, the group, and the standalone financial position of the company as at 31 December 2019, and of their consolidated and standalone financial performance and their consolidated and standalone cash flows for the year then ended in accordance with International Financial Reporting Standards, IFRS, and with the requirements of the Jamaican Companies Act. What we have audited: GraceKennedy Limited's consolidated and standalone financial statements comprise the consolidated statement of financial position as at 31 December 2019, the consolidated income statement for the year then ended, the consolidated statement of comprehensive income for the year then ended, the consolidated statement of changes in equity for the year then ended, the consolidated statement of cash flows for the year then ended, the company statement of financial position as at 31 December 2019, the company income statement for the year then ended, the company statement of comprehensive income for the year then ended, the company statement of changes in equity for the year then ended, the company statement of cash flows for the year then ended, and the notes to the consolidated and standalone financial statements, which include significant accounting policies. Basis for opinion: we conducted our audit in accordance with International Standards on Auditing, ISOs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the consolidated and standalone financial statements section of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with the International Ethics Standards Board for Accountants Code of Ethics for Professional Accountants, IESBA Code. We have fulfilled our other ethical responsibilities in accordance with the IESBA Code. Our audit approach, audit scope. As part of designing our audit, we determined materiality and assessed the risks of material misstatement in the consolidated and standalone financial statements. In particular, we considered where management made subjective judgments, for example, in respect of significant accounting estimates that involve making assumptions and considering future events that are inherently uncertain. As in all of our audits, we also addressed the risk of management override of internal controls, including, among other matters, consideration of whether there was evidence of bias that represented a risk of material misstatement due to fraud. How we tailored our group audit scope. We tailored the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statements as a whole, taking into account the structure of the group, the accounting processes and controls, and the industries in which the group operates. In assessing the risk of material misstatement to the group's consolidated financial statements, and to ensure we had adequate quantitative coverage of significant accounts in the consolidated financial statements, we designed and performed audit procedures over various components. The group comprised 45 reporting components, of which we selected 23 components, which mainly represent the principal business units within the group and covered entities within Jamaica, Barbados, Montserrat, Trinidad and Tobago, Canada, the United Kingdom, the United States of America, USA, and Guyana. Of the 23 components selected, we performed an audit of the complete financial information of 13 components, full scope components, which were selected based on their size, risk characteristics, or both. For the remaining 10 components, specific scope components, we performed audit procedures on specific accounts and/or analytical procedures within that component that we considered had the potential for the greatest impact on the significant accounts in the consolidated financial statements, either due to the size of these accounts or their risk profile. The audit scope of these components may not have included testing of all significant accounts of the component, but will have contributed to this coverage of significant accounts tested for the group. In relation to the remaining components, none of which are individually greater than 3% of the group's profit before tax, we performed other procedures, including analytical review procedures and testing of consolidation journals, intercompany eliminations, and foreign currency translation recalculations to respond to any potential risks of material misstatement to the group's consolidated financial statements. For components that are in scope of the group audit, we use component auditors from PwC network firms and non-PwC firms who are familiar with the local laws and regulations to perform this audit work. Throughout the audit, we had regular meetings and correspondence with management and component auditor teams to follow up on progress of work of all components. The group engagement leader and the senior members of the group engagement team review reports about the audit approach and findings of the component auditors. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the consolidated and standalone financial statements of the current period. These matters are addressed in the context of our audit of the consolidated and standalone financial statements as a whole, and in forming our opinion thereon, we do not provide a separate opinion on these matters. Key audit matter: credit risk impairment of loans and receivables to customers group. Refer to notes 2H, 3C1, 3C2, 4, 8, and 9 to the consolidated and standalone financial statements for disclosures of related accounting policies, judgments, estimates, and balances. As at 31 December 2019, the group has on-balance sheet gross loans receivable balances amounting to $30.6 billion, which are significant in the context of the overall group of statement of financial position, representing 20% of total assets. Included in loan receivables are loans and advances to customers, which consist of mortgages, commercial and other loans to customers for which the underlying properties are pledged as collateral. Off-balance sheet exposures include guarantees and undrawn commitments such as credit cards, overdrafts, and loan commitments amounting to $1.5 billion. Expected credit losses, ECL, amounted to $1.1 billion for loans receivable, including off-balance sheet items. We have focused on the following areas because there are a number of significant management-determined judgments within the ECL model. The probability of default, PD, assumptions are developed based on the group's specific historical default rates for each industry classification. The loss given default, LGD, is developed based on the group's specific historical loss rate for given exposure. Use of multiple economic scenarios that are forward-looking and valuation of real estate property pledged as collateral for term loans. This is the most significant repayment source for credit-impaired assets, stage 3. How our audit addressed the key audit matter. We updated our understanding of management's ECL model and performed inquiries to evaluate any changes to the model. We tested the completeness and accuracy of the 4-year historical data inputs by agreeing details on the default rates and recovery rates. The data used for these assessments were based on the group's internal default experience segmented by product type. For a sample of credit exposures used in developing default, recovery, and utilization rates, we agree the critical data fields being origination date, maturity date, default date, principal, collateral value, and cash recoveries and exposure limits to source documents. We reperformed the calculation of days past due, a key data input in the PD parameter, in the group's banking system on a sample basis. We evaluated the appropriateness of management's judgment pertaining to forward-looking information, multiple economic scenarios, and weighting applied to capture nonlinear losses. For a sample of stage 3 loans, we obtained an understanding of the latest developments at the borrowers and the basis of measuring the impairment provisions and considered whether key judgments were appropriate given the borrower's circumstances. We reperformed management's impairment calculation. We tested key inputs to the impairment calculation, including the expected future cash flows and valuation of collateral held, and determine the reasonableness of the valuation of real estate collateral with the assistance of our auditor's expert. Based on the procedures described above, no exceptions were noted in the calculation of expected credit losses as it relates to loans and receivables to customers. Key audit matter. Goodwill impairment for the United States of America USA Operations Group. Refer to notes 2G, 4, 1, and 11 to the consolidated and standalone financial statements for disclosures of related accounting policies, judgments, estimates, and balances. The carrying value of goodwill is $1.5 billion, of which $981 million relates to the USA operations. Management performed a goodwill impairment assessment by using value in use calculations, which are based on future discounted cash flows, and determined there was no impairment as at 31 December 2019. We focused on this area as the assessment of the carrying value of goodwill involves a judgment in relation to forecasting cash flows, with key inputs being weighted average cost of capital, growth, and discount rates. How our audit addressed the key audit matter. We obtained management's discounted cash flow model, DCF, including qualitative and quantitative analyses, and obtained an understanding of the process used by management to determine the fair value of the reporting unit. We tested management's assumptions used in their impairment testing model for goodwill, including the future cash flow projections, discount rates, and growth rates applied. The following procedures were performed. We were assisted by our valuation experts to review the appropriateness of the assumptions and methodology used in the DCF. We tested the mathematical accuracy of the underlying calculations included in the DCF model. We agreed 31 December 2019 base year financial information included in the prior year's forecast to the audited results compared the current period base year information to the audited results to evaluate management's ability to accurately forecast financial information. We evaluated management's key assumptions by comparing them to historical results and economic and industry data where available. We performed an independent recalculation of the carrying value and performed sensitivity analysis by looking at changes in management's assumptions. We considered subsequent events and their impact on the entity's cash flows and forecasts. Based on the work performed, management's assumptions were not unreasonable. Key audit matter, valuation of pension scheme assets and other post-employment obligations, group and company. Refer to notes 2M, 43, and 14 to the consolidated and standalone financial statements for disclosures of related accounting policies, judgments, and estimates and balances. The group has defined benefit pension plans with pension plan assets and other post-employment obligations, which are significant in the context of the overall statements of financial position of the group and company. Pension plan assets amounted to $5.8 billion for both group and company, and other post-employment obligations amounted to $5.8 billion and $2.8 billion for the group and company, respectively. We focused on this area as the valuation of the pension liabilities requires significant levels of judgment and technical expertise in choosing appropriate assumptions. A number of the key assumptions can have a material impact on the calculation of the liability, including salary increases, inflation, discount rates, and mortality rates. The pension assets include significant pension investments, the fair value measurement of which includes some judgment. Management uses external actuaries to assist in determining these assumptions and in valuing the net pension assets and other post-employment obligations. How our audit addressed the key audit matter. We performed the following procedures on valuations of net pension plan assets and other post-employment obligations as follows. We reviewed the audit work papers of the auditors of the pension scheme in relation to work performed on the fair value of pension assets. We evaluated management's assumptions made in relation to the valuations of the net pension assets and other post-employment obligations and the assumptions around salary increases and mortality rates by comparing them to national and industry averages. We agreed the discount and inflation rates used in the valuation of other post-employment obligations to those issued by the Institute of Chartered Accountants of Jamaica and targets set by the Bank of Jamaica. We tested the completeness and accuracy of data extracted and supplied to the group's actuary, which is used to calculate the pension scheme surplus or deficit. We were assisted by our actuarial specialist and performed inquiries with management and their actuary to understand and evaluate management's key economic assumptions used in the calculation of the liability. Based on the audit evidence obtained, we determined that the available audit evidence supported the data and assumptions used by management in the actuarial valuations and determination of the fair value of scheme assets. Other information. Management is responsible for the other information. The other information comprises the annual report, but does not include the consolidated and standalone financial statements and our auditor's report thereon, which is expected to be made available to us after the date of this auditor's report. Our opinion on the consolidated and standalone financial statements does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statements, or our knowledge obtained in the audit, or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibility of management and those charged with governance for the consolidated and standalone financial statements. Management is responsible for the preparation of the consolidated and standalone financial statements that give a true and fair view in accordance with IFRS and with the requirements of the Jamaican Companies Act, and for such internal control as management determines is necessary to enable the preparation of consolidated and standalone financial statements that are free from material misstatement, whether due to fraud or error. In preparing the consolidated and standalone financial statements, management is responsible for assessing the group and company's ability to continue as a going concern, disclosing, as applicable, matters related to going concern, and using the going concern basis of accounting unless management either intends to liquidate the group or the company, or to cease operations, or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group and company's financial reporting process. Auditor's responsibility for the audit of the consolidated and standalone financial statements. Our objectives are to obtain reasonable assurance about whether the consolidated and standalone financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatement can arise from fraud or error and are considered material if, individually or in the aggregate, they could reasonably be expected to influence the economic decisions of users taken on the basis of these consolidated and standalone financial statements. As part of an audit conducted in accordance with ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risks of a material misstatement of the consolidated and standalone financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than for one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. Obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and company's internal control. Evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures by management. Conclude on the appropriateness of management's use of the going concern basis of accounting and, based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cast significant doubt on the group or company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the consolidated and standalone financial statements, or, if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group or company to cease to continue as a going concern. Evaluate the overall presentation, structure, and content of the consolidated and standalone financial statements, including the disclosures and whether the consolidated and standalone financial statements represent the underlying transactions and events in a manner that achieves fair presentation. Obtain sufficient appropriate audit evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statements. We are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identify during our audit. We also provide those charged with governance with a statement that we have complied with relevant ethical requirements regarding independence and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence and, where applicable, related safeguards. From the matters communicated with those charged with governance, we determined those matters that were of most significance in the audit of the consolidated and standalone financial statements of the current period and are therefore key audit matters. We describe these matters in our auditor's report unless law or regulation precludes public disclosure about the matter or when, in extremely rare circumstances, we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Report on other legal and regulatory requirements. As required by the Jamaican Companies Act, we obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been kept, so far as appears from our examination of those records, and the accompanying consolidated and standalone financial statements are in agreement therewith, and give the information required by the Jamaican Companies Act in the manner so required. The engagement partner on the audit resulting in this independent auditor's report is Peter Williams, signed PricewaterhouseCoopers Chartered Accountants, 28 February 2020, Kingston, Jamaica. Thank you.
Thank you very much, Mr. Williams, for making a very difficult task look so easy. We now turn to the auditor's report, the auditor's report, the director's report, and the statement of accounts. We continue with this area. May we have a motion that the director's report be taken as read?
Yes, Chair.
Andrew, moved by Mr. Masado, seconded by Mrs. Moss Solomon. All in favor?
Aye.
Any against? I declare the motion carried. Will the Secretary please table the reports together with the statement of accounts?
Yes, Chair.
May we have a motion that the audited group accounts for the year ended December 31, 2019, and the reports of the directors and auditors circulated with the notice convening the meeting be and are hereby adopted. Moved by Mr. Johnson and seconded by Mr. Webby. The registrar has advised that we are in receipt of 84 votes by proxy in favor of the resolution, representing 38.64% of the issued share capital. I would now ask that the third resolution be moved. Moved by Mrs. Johnson, seconded by Mr. Webby. All in favor?
Aye.
The motion is carried. We now come to the approval of dividends. May I have a motion that, as recommended by the directors, the interim dividend paid on 4th of April 2019, the 14th of June 2019, the 26th of September 2019, and the 13th of December 2019 be, and they are hereby declared as final, and no further dividend be paid in respect of the year under review. The registrar has advised that we are in receipt of 84 votes by proxy in favor of this resolution, representing 38.64% of the issued share capital of the company. I would now ask that this fourth resolution be moved.
So moved, Chair.
Moved by Mr. Webby, seconded by Andrew. Thank you. All in favor of the motion?
Aye.
Any opposed? I declare the motion carried. We now turn to the re-election of directors and the resolution for permission to re-elect en bloc. As I have a potential conflict, I'm going to ask Mrs. Moss Solomon to take us through this section.
Thank you, Chair. The directors retiring from office by rotation pursuant to Article 102 of the company's Articles of Incorporation are Mr. Everton MacDonald, Mrs. Gina Phillips Black, and Mr. Gordon Shirley, all of whom, being eligible, offer themselves for re-election. May we have a motion that the directors retiring by rotation and offering themselves for re-election, that is Mr. Everton MacDonald, Mrs. Gina Phillips Black, and Mr. Gordon Shirley, be re-elected en bloc. I would now ask that the fifth resolution be moved. It's moved by Adam Jones and seconded by Mr. Don Webby. All in favor of the motion?
Aye.
Opposed? May we therefore please have a motion that Mr. Everton MacDonald, Mrs. Gina Phillips Black, and Mr. Gordon Shirley be and they are hereby re-elected directors of the company. The registrar has advised that we are in receipt of 84 votes by proxy in favor of this resolution, representing 38.64% of the issued capital of the company. I would now ask that the sixth resolution be moved. Moved by Mr. Don Webby, seconded by Mr. Andrew Mesado. All in favor of the motion?
Aye.
Opposed? The motion is carried. I will now hand over to Mr. Gordon Shirley.
Thank you, Mrs. Moss-Solomon. May we have a motion that the amount shown in the accounts of the company for the year ended 31st December 2019 as fees of the directors for their services as directors be and is hereby approved. The registrar has advised that we are in receipt of 84 votes by proxy in favor of this resolution, representing 38.64% of the issued share capital of the company. I would now ask that the eighth resolution be moved.
So moved, Chair.
Moved by Mrs. Moss-Solomon, seconded by Ms. Johnson. All in favor?
Aye.
Aye.
Contrary? The motion is carried. Appointment of auditors. The auditors of the company, PricewaterhouseCoopers Chartered Accountants, will continue in office pursuant to Section 154 of the Companies Act. May we please have a motion that the PricewaterhouseCoopers Chartered Accountants, having agreed to continue in office as auditors, be and are hereby appointed auditors of the company pursuant to Section 154 of the Companies Act, and to hold office until the next annual general meeting at a remuneration to be fixed by the directors of the company. The registrar has advised that we are in receipt of 84 votes by proxy in favor of this resolution, representing 38.64% of the issued share capital of the company. I would now ask that the ninth resolution be moved. Moved by Mr. Webby, seconded by Mr. Masado. All in favor?
Aye.
Contrary? The motion is carried. Ladies and gentlemen, this concludes the agenda for this afternoon's meeting. I would like to thank all of you for your continued interest in and support for GraceKennedy, as well as for your understanding of the revised format of this meeting due to COVID-19. We ask that you continue to do all that you can to keep yourselves and your families safe and healthy. Good afternoon, ladies and gentlemen.